Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video, I said that it was the perfect time to buy gold and that it would outperform the stock bond 60-40 portfolio, and that has happened exactly. So we went up $230. That's quite a big rise. So let's see what we have today. We have another data point for the gold forecast index, which is the leading index using leading indicators. And Fred has updated our charts, and I had to redo the whole website because it looks very bad. But okay, we need to work with these charts now. I hope it's a bit visible. But okay, latest data point is up. Okay, so the red line is up. That's the gold forecast index, which means gold will continue rising. Okay, because this is a leading indicator, which means we should keep on buying. Taylor roll rate is improving. If this goes up more, then gold will go up. Misery index is slowly going up. I think unemployment will go up. But yeah, the latest ADP numbers were good, so maybe not that much, but inflation is certainly going to come back. We know M2 money supply is rising, so this should rise and gold will go up. Real output also deteriorating. Yeah, here something interesting is happening with COMEX. So COMEX is a very small market, but it is a proxy. And we have seen a lot of buying here at the COMEX. So this is going to be a bit higher. So yeah, the COMEX LBMA, these things are doing things and probably pushing gold higher. We know that COMEX warehouse levels are correlated to the gold price. GLD is not going up yet, but once it goes up, we are going to see much higher gold prices. So this is what I'm talking about. COMEX was going up like crazy in the last month. This is probably going to break out. Yep, that's what I think, and gold will move together with that. Look at the deliveries, they are spiking, and that is correlated to gold. So high deliveries means gold will spike upwards. I don't have LBMA data yet. China data still need to come. I think this will bottom out and go back up. So demand is still strong. Silver, yeah, it's just following gold. Except SLV was going down, which is weird. Normally this should go up, not down. Shanghai silver demand is going up. And these are the COMEX silver numbers. We also see an increase here in COMEX silver. Central banks keep on buying. That's good. China buying. We still need to see those numbers. I hope they will keep on buying. Yeah. So we are still at a very low level. This can still go higher. Look at this. Nobody likes gold miners. It's at the bottom. Here in 2011, everyone bought it. So this still needs to revert to the upside, and then a lot of money will be made. Okay, so central bank buying. Let's see what the Chinese are going to do. This is very weird. The premiums in the West are still very low. So there's no interest still in gold and silver. Very low premiums. So yeah, you can just buy it and it's very cheap. Shanghai gold premiums, latest data is slightly negative. So maybe this is a spike up, needs to retrace a bit, but it looks healthy. It looks healthy. Silver premium still elevated. Yeah, UpMax gold premiums still at low levels, so nobody is interested. COT report, open interest is starting to rise, so that's correlated with a higher gold. Swaps going this way means that smart money is actually buying, so this trend can keep on rising. And this is a smart money, yeah? So this is pretty high, which means that the trend is your friend going higher. Swiss franc a bit lower. Tips still needs to go this way. Real yields still positive, so this needs to revert up and then gold will go much higher. Seasonality, we are in February. There could still be a bit of a rise, and then we get into March. So it's still good to buy gold right now. And the sentiment was pretty bullish on minus, so yeah, probably need a bit of a retrace. Currency in circulation, the long-term chart still looks good to go up in gold. This is a new chart. This is gold vs money supply, and it's still at a very low price, very low ratio. Gold can still go up much more if you compare it to the money supply. And you can actually draw a line. So this is the line here. This is going to break out, which correlates with this line. And this is going to break out from this ceiling. Okay. 30 to 10-year yield ratio looks like it's bottoming out, going higher. That is the debt ceiling is a bit stuck, but once it's once they hike the ceiling, then that will go up again. We know that GDP is slowing down normally, so debt to GDP going up and gold will follow. Near-term forward spread, I don't have an update yet. It's still stuck here somewhere at 0, but it's still a very good place to buy gold because yeah, you need to buy when this turns positive. Each time that it turns positive, then gold rises in the coming years. Okay, so this is no exception. We go above 3,000. Rate hikes, we are still going to have rate cuts. There are many people now saying that there will be more rate cuts. And you can see that the 2-year yield is starting to roll over. If this starts going like this, then there will be more rate cuts. Foreign gold deposits were flat, so nothing happening there. This chart, probably I need to delete it because it's at 0 now. Cash on the balance sheets have gone down and now probably flat. Okay, lease rates. We have seen a pretty big spike in the lease rates. This is the 6-month lease rate. Look at this spike. Each time when we have a spike, gold goes up. Okay, spike, gold goes up. Spike, then up, spike up, and now the biggest spike ever. we are going to see 3,000 gold. Same with the 1 month lease rate spikes. Every spike is a bottom. And this is a spike in the other direction, so that's a top. This spike is a bottom. This spike is a bottom. This spike is a huge bottom. This doesn't look like a bottom. This is like a top, but actually it is a bottom, and it will go much higher. So 3,000 is a piece of cake. Gold futures curves keep on rising. We are already at 2,900. This is an old chart. 2,900 going to 3,500 or 3,400. Same with silver. VIX looks ready to break out. Yeah, it's very low, so this will break out at some point, and then gold will outperform stocks. Fundamental value is at 0, but I don't look at this that much. And then the DXY. DXY is going to roll over now because of the huge deficits, and that means gold will go up. Let's take a look at maybe money supply. So money supply is rising again. That's good for gold. Yes, central bank balance sheets. I think they still are doing QT, not QE yet, but soon they will switch over to QE because liquidity is now at 0. There's no reverse repo anymore. So this needs to reverse at some point unless they want to crash the market. And you can see it's still dropping, but at some point it will start moving back up. Deficits, this is the most important one. We see a huge trade deficit now. Let's look at the magnitude. Is this the latest? Yeah, so trade balance dropping. That's a huge deficit. Also, budget deficits are increasing. So this is very good for gold. Here, look at the magnitude. It's making new lows. So there's a goods deficit, and the services are flat. But the goods, look at that. This is not good for the dollar. However, there is some good news. This is the air freight price is actually moving back up. So maybe these deficits will go back a bit less. Okay, that's possible. Then here, import prices elevated, but export prices down. So the gap is wider, so more deficits. And here we see prices moving up, so the inflation is coming back. Imports and exports. Look at this. The Q4 numbers are out, and you can see actually this is topping out. So this could mean something. If we have a topping out pattern, then we could go into a recession. Right? If this is a top, a recession could start. Okay? So that's something to watch. Maybe this is a top. Deficits, okay, deficits are pretty big, and the US dollar is still at all-time highs. So this, I think this needs to roll over. When is it going to roll over? I have no idea, but this doesn't look very bullish for the dollar. Okay. So that was that. Let's take a look at capacity utilization. Capacity utilization has been rising for this month, so inflation is reappearing again. Okay, some blog posts maybe. So there was a video about 8,000 gold from Peter Schiff. Interesting video. When you look at this, you can see these moves up. This is a log chart. So if we have the same move from here to here, then we could see 8,000 gold indeed, only in 3 years. So from here to here would be indeed about 3 years. I mean, if you have gold miners and gold goes to 8,000 in 3 years from now, you are going to make a lot of money. Tariffs, yeah, Trump is putting some tariffs on China and maybe on Mexico and Canada. I think he's bluffing, but if he does it, then you can see easily that tariffs are correlated with gold, up and down, down, then here a bump up, another bump up, and this is the biggest bump ever. So gold could skyrocket to 8,000 if tariffs happen. We don't know if tariffs will happen. Look at the current account balance as well. We had here a lot of deficits, and that's also when tariffs went up. So now we are getting back in this scenario with a lot of deficits and tariffs going up. So these were periods where gold soars, okay? And these were the 1930s, which is the Great Depression, okay? Gold lease rates, I already talked about that. Spiking gold lease rates. China oil demand. So I have been saying demand is not that great in oil, and oil has actually done nothing. It's still at 70. Look at this. This is the China import seasonality. It's at lows, below the lows. So there is not a lot of demand from China. And here refinery rates are at 50%, almost all-time lows on this chart. So I don't buy the narrative of oil demand going up. Look at this one. Global inventories may go down, but normally if that happens, oil should go up, but it's actually also down. So what happens if this here moves back this way? When inventories start to rise again, then oil will probably drop to 60. So this is not a bull market for me. I would rather stay in gold. And China buys less oil, but they are buying a lot of gold with all of these current balance surpluses. So this is the balance of trade is going massively in surplus. So you can see here zoomed in, and it is correlated to gold. So once China went into these massive surpluses, they are saving in gold. You can see that it rose from 2000 onwards. This here is private and official Chinese gold reserves. They also went up from 2000 onwards. And this is the current account. It's also up. So they are saving in gold, and you should follow them. Gold bull market to 5,000. Okay, so these are the all-time high analogs, and we are still here. This can easily go up in the next 3 years and will go to 8,000. So yes, 8,000 is possible, as Peter Schiff says. And near term 3,000, 4,000, 5,000, even 8,000. And you know my gold miner charts. Maybe we should look at them later on. Fair value of gold is apparently 10,000. This is from James Turk, also a nice person. So currently he thinks that the fair value is 10,000, which is correct. We are going to 8,000 according to Peter Schiff. So the gap still needs to close 8,000, 10,000. So it looks very good. And this is a nice chart as well of PGM demand. So this was PGM demand in this is a chart from 2020. And you can see they thought that demand was going to go up for PGMs. And this is a chart now. So you can see the curve has completely changed. Instead of going up, the demand is going down. So this is why I don't like platinum, palladium, rhodium. So avoid that, please. M2 vs inflation. I think that we are headed into inflation because the money supply is going up. Okay. What do we have more? The refinancing. Yes, there are a lot of bonds that will mature this year. So this was still at 8 trillion, but we are already in 2025, and now looks like it's going to be 10 trillion. If you add this 2 trillion with the 8 trillion, then we have 10 trillion in debt that needs to be refinanced. So I would not be in bonds. So we got the sanctioning of tankers, right? Which spiked the oil price. But I think that's just temporary, a temporary spike in oil, and oil will continue to collapse. Okay, so then these are just blog posts from the last video. So let's go over some gold miner charts. So this is the current situation, right? We have a bunch of miners with an upside of double to triple. Now what happens when we go to 3,000? That's easy peasy. Then we have a triple for some of these juniors. The large caps will not have that much upside at 3,000. So this is pretty fair value now. But of course, we are going to 3,500 in a year. Then there is upside. We have 50% upside here. But juniors will be around 3x, 4x. Okay, 3x, 4x. I do like multi-baggers. And then we go to 4,000. We need to expand the chart then to 6, maybe even 8. And then you can see these juniors are going to be 4 to 5 baggers. Large caps will be doubles at 4,000. Even step gold would be a 9x. Then in 2 to 3 years, we will see 5,000 gold. 5,000 gold will give us, let's do 12, will give us around 7x in the juniors, and normal companies will be 2 to 3x. at 5,000 gold. You can see some of them are leveraged, like Zerado Gold would be very leveraged to gold. Alkane Resources, Integra, but they are not mining yet, it's still in development. So my gold has a lot of upside. Step gold would be 12x. So plenty of upside in the juniors at 5,000. And eventually we will get to 8,000. What happens at 8,000? 8,000 gold. Then we need to go to 20x. So juniors would be 15x to 20x. So a lot of money will be made here, and the large caps will be 5 baggers. So if you believe Peter Schiff, if you believe that gold will be going to 8,000 in about 3 years' time, like this, and eventually it will top out at 8,000 and go back a bit, so it would be 8,000 and then 5,000, 6,000. That is a very good place to be for gold miners, because gold goes up to 5,000, 8,000 in 3 years, but I don't think that inflation will rise that much. I mean, inflation won't double in 3 years. That's impossible. Look at oil. Oil is already down, so inflation will probably be flat to maybe 5% higher, maybe 10% higher, but gold would be 3x higher at 8,000. So that's a outperformance of gold compared to inflation. And then we will see this outcome. You will see 10 baggers if you buy these things. And if you put all your money in a basket of these things, these miners, do a 10x and you are retiring. It's that easy. You are retiring in probably 3 years. And then you can quit your job and do things that you want to do. So that is the update for this video. And I'll see you in the next one.